Greetings once again. Today's show focuses on three primary areas. The first is that we had a meeting with an analyst from a company called Standard Chartered that manages over $1 billion. And he got rid of his stock as soon as he saw Elon in the smoking incident and kind of caught the peak of the stock price approximately six months ago. The second thing we cover today is what's called brand protection. We actually had a meeting with an executive at Honda, and he was reviewing the small and large things that Honda does to protect their brand. And we were kind of taking a look at this relative to how Tesla handles business as well. And then the final thing we take a look at based on our analyst conversation is what's the difference between the Bill Gates process and the Elon Musk process in terms of corporate management and development, and then the consequences associated with that for investors as well as owners of products and services from that company. This is Greg for Tesla Fan Insight. Thanks once again for joining us. Please note we appreciate it if you'd subscribe as well as support us on Patreon, both of which help us to improve quality of execution in every area. So today we're kind of moving on to some discussions. I had an encounter yesterday with a money manager from a bank called Standard Chartered, and he has the freedom to invest client money wherever he'd like. And he made some very interesting comments that I wanted to make the nucleus of our show today. So I asked him in general, what his thinking was on why he sold all of his Tesla shares. And what he shared with me was that the tipping point for him relative to Elon Musk and Tesla was when there was the incident that you'll recall where Elon Musk was smoking weed while being interviewed. And in his mind, that was a sign that while there's a lot of great things about Tesla, it kind of doesn't look like Elon's very serious, and his behavior in that regard highlights the lack of seriousness. So I thought that was kind of an interesting comment, because if you look at the numbers, selling at that point was actually somewhat the peak of the stock price for a certain period of time. And I thought that was kind of an interesting decision that was made. So I went into a conversation with him about sort of what are the core points that really affected his lack of interest in sticking it out with Tesla and the stock price. And he shared three primary elements. The first is he indicated that a company needs to have good products. So first and foremost, if the product isn't good, you're not going to get customer adoption, and therefore you're out the gate in a bad position. The second thing he talked about was distribution. So, how is your process of distributing your vehicles set up? Is it a solid foundation? As we all know, there's a lot of challenges Tesla's having with distribution in terms of places that can and cannot sell based on having no dealership network. And you also have some interesting processes going on where Tesla is trying to reduce time to market or time for vehicles to get to customers. So they've been buying trucking companies in an attempt to slice the sit time for vehicles out and therefore get better throughput. So I think the distribution component, I'd have to agree, it's okay, but without the dealers and without the cash to do it right, you have all kinds of issues, particularly related to number of dealers, where they're located, and then the parts that those dealers would be prepaying for to fill up warehouses to support the success of the company. The third point that was made by him was, do you have good service on the back end? And so I was really fascinated by this because um, one of our conversations that we had with the Honda executive was that there's a lot of effort that's made at Honda to protect the brand. So what that means is that every aspect of customer metrics are carefully monitored to keep improving. And by doing so, that's part of the Honda process of protecting the brand. And I was kind of shocked when I heard this from the Honda engineers, because there's so many small and large things that I'm seeing from Tesla that suggest that the brand protection process is really not happening. And it's interesting because sales are a bit slow, but one of the issues with brand protection is if you have a somewhat happy or a happy Tesla customer, that individual knows a lot of people in their neighborhood, in their professional circles, etc. And their opinion goes a long way towards other people purchasing the car. So if you're not on top of it in terms of service and recalls and parts and all these little areas, you start to lose those customers, because the word of mouth advertising is far more powerful than any other form of encouragement for people to buy. So I wanted to note that as he reviewed the metrics of how one might evaluate an auto company, I think there's no doubt that Tesla has the products right, and they're performing excellently. When we move on to when we move on from products into those other two arenas, we have to say that Tesla is definitely lacking. Sort of where are we going with this? The answer is we're going into robo-taxis, and we're also going into more advanced features for autopilot. And so I was kind of intrigued because right now Tesla's actually very short on cash, as we all know, and there are a lot of customers whose cars are in ill repair and need parts, etc., and they're not getting them. So if the emphasis by senior management seems to be, let's specifically focus on long-term projects that don't add net revenue, and the issues that are really affecting the customers are don't seem to be top of mind share, then it seems that the direction of the company seems to be future oriented, which is good. But one of the key features of the future is you got to make sure you take care of the customers you have now, because them rebuying your product and recommending your product to their friends and family are the type of things that are going to allow the companies to succeed. Another sort of data point that popped up this week, and we're in the first week of June 2019, is that J.B. Straubel, who's considered the foremost battery expert in the world, who's a chief technical officer at Tesla, sold $3 million worth of his Tesla stock. And it's significant because usually you monitor what the management team is doing when it comes to their stock. Elon has been buying the stock, but you have to say, because I believe that the last holdover from the founding group of engineers for the company is J.B. Straubel, and he's the heart of their sort of battery development, battery future efforts. And the way it feels right now is he's starting a process where he's actually somewhat exiting the company. And I think that this raises some concerns from my side that, hey, things are going fairly smoothly. The company is running pretty well right now. But the question mark that comes up is, how are we setting up for the future if you basically have your number one battery guy / engineer sort of creating a path towards an exit? Now, I guess this isn't a shocker, because from what we can tell, most of the top 50 executives have been changed out or have left. And so I believe that the company is on a stable enough footing that the next year or so The path is set, the plants are built. China seems to be the only thing that's coming on that's uniquely different that might need attention. But basically, I think the core of the company is solid and it can weather the loss of some folks. But, having to replace and losing great people and experienced people in particular at key slots, I think is definitely a concern. I think it's definitely going to affect the quality of execution of the company. I was also sort of fascinated by the fact that, one of the things I've asked our viewers to do is to share challenges and fixes that they've had for their vehicles, because what really seems to be emerging is you're developing a community of owners to help figure out the future for Tesla, because I think their products are great. I think we'd love for them to succeed greatly. But as I've shared in most recent shows, we're kind of in that unknown zone of where things are going, given the state of things, given the amount of losses, et cetera, et cetera. I do believe that if Tesla continues to fall in stock price as it has based on all this uncertainty, that they come into the range of getting bought by some well-heeled competitors that will then be able to bake all that technology into their vehicles. And so I don't think the Tesla cars go anywhere, but I do think that the company, is definitely on shaky footing, and we're hoping for sort of a change. The one other thing that I wanted to look at in terms of kind of what's going on with Tesla right now is that there's a concept called crying wolf. So as you'll recall last year when Elon announced the buyout, as soon as he announced it, our reaction was it was unlikely, because buyouts of auto companies are difficult because you not only need to do the buyout, but you also have large amounts of working capital that's tied up in vehicles. So we actually, after hearing about the buyout that he announced, were highly skeptical and did not think it would occur, which is what happened. Now, if you'll note, Elon has a thing going where he likes to make sort of big, bold statements and then follow those statements with switches in other directions. So, for example, in January, Elon announced that going forward, the company would be profitable each quarter. The subsequent quarter, the company lost $700 million. So comments like that bring up multiple questions, but there are two questions. If you're seeing the production side, you're seeing the costs well, and you're making statements about profitability going forward, it suggests that you have a good command of everything that's going on. So when you show up with a $700 million loss 30 to 60 days later, it's a big time issue, because all of a sudden, not only are you missing numbers, but you're making very bold and big statements that subsequently you come back and make a statement in completely the opposite direction. So is it that you don't know what's happening? Is it that you're being disingenuous, or some other thing down the list? But as you deal with investors and their money, what they tend to do is like to work with companies that provide a certain level of certainty, which Tesla is really not providing right now to stockholders, bondholders, investors, etc. So I just think that there's a whole bunch of unknown questions, and the more questions that are associated with demand, with full control of costs, etc., sort of puts us in this interesting zone where we're rooting for the company to do well, but there doesn't seem to be the same emphasis by Elon in particular, and then the company at a larger scale, of really being careful in your process to deliver statements to the investing public, the buying public, that really shows that every detail is being managed well. I have to admit, and we've talked about this numerous times, that for me the gold standard on vehicles is really Toyota. And I just wanted to note again that we tend to focus on, hey, who are the best in breed in terms of quality of execution of vehicles and how do they execute, and how does that execution that you're doing reflect great process that allows the company to be successful. And I'd have to say that as we're watching Tesla do its thing right now, one would have to say that we're seeing an interesting process go on here where we're really not seeing the kind of quality of execution that should come with a 40 billion in market cap, or used to be 40 billion market cap company, but where we're really hoping to see better days coming forward. For this segment, I wanted to finish up with a mention of Peter Drucker. Is a famous management guru, and one of his famous quotes that I've always enjoyed is he makes the comment that whatever gets measured gets managed. So if you guys want to see where we think Tesla's going and why, note the things that the company seems to be managing based on measurements, and we'll see, based on that, sort of what it means for the company and how it does going forward. I've noticed Jerry and Roger and others sort of posing different questions as we've been going through the show today. And I wanted to note that I think that, to my knowledge, JB Straubel has somewhere around $200 million worth of Tesla stock, and that's probably down 25% or 25 to 30% in the last 6 to 8 weeks. I believe his total holding at one point was worth about $300 million when the stock was at $350. Obviously, we've cut that in half. So in theory, his holding volume and value is sort of moved into that realm. Cindy, thanks for the comment regarding Deming, not Drucker. I think that, anyway, we're hopeful we see some nice changes. I really feel like the priority of the company right now is very high volume delivery, as well as trying to figure out the bottlenecks in that. And things like parts warehouses, et cetera, cost money, but those are the type of things that allow the company to really move to protect the brand better than we've seen thus far. So I'm hopefully optimistic that we'll see these kind of changes. It kind of doesn't seem, the customer priorities really don't seem to be a focus of the company right now. And this concerns me because as you have you're going forward and you have competitors enter, the ability to get quality service as well as a better distribution network will really become competitive disadvantages for Tesla. And we'd like to see the company be able to keep prospering into the future without the drag of these type of issues, which I think are fairly easy to both understand and manage. So, I think that's my thought process. I wanted to note that today we're kind of also focused on our health conversation that we've had in the past. As you know, I'm about to do my 20 leg lifts. I'm also suggesting that some exercise and a movement towards a plant-based diet seems to be a good idea for everyone involved, including myself. Happy to field questions as we're closing out here. I did not have any sort of huge addition to our show. Wanted to thank you all, Roger, Jerry, Cindy, I think Scott. Greetings to our friends in London. If you have any photos of Tesla products or services in your area, we'd love to see them if they're interesting. I wanted to also note to you that I actually, good morning, Robin. I also wanted to note to you that, Jerry, you're asking what about the battery solution? I don't know if you guys are aware of this, but I've been kind of keeping an eye on superconducting. And one of the problems that I've been hearing about is the transition to superconducting relative to Maxwell is one of the battery aspects that's been coming up. Battery volume production is another question. I'd have to say that Elon is asking for more batteries, but I'm kind of confused as to why, because if you're not selling the cars you're currently making, it seems like the battery production volume is pretty much in line with the demand for cars right now. The one thing that would come to mind is that by increasing battery production, you perhaps get to volume levels that allows you to lower overall price. But I really think this is a tight squeeze right now for Panasonic, because if Tesla owes you $2 billion and they want more batteries that they're not going to pay for, I think that the accounts payable or receivable to Tesla have gotten so large that they're heading towards threatening the balance sheet of Panasonic. So I really am anticipating that Panasonic will not increase production dramatically, simply because Elon and company can't afford to pay for them, even though it'd be nice if they had them. So we'll see what happens there. Roger, I'd love a post or something or a reference to the big difference Maxwell makes, but I think their engineers will make a difference initially. I've listened to a lot of conversations about supercharging, and it's just not ready yet for the big time. Scott, if you look at the numbers there, Tesla sort of flooded the supply channel with the most expensive vehicles. I think they were hoping to not have those buyers buying the cheaper cars. The challenge that's popped up, though, is that the highest price point has the fewest buyers in terms of percentage, both in the United States and in Europe. I don't know China as well, but I think, well, that's the key, Scott, is demand is very high, but it's very high for the cheaper vehicles. And that's not what Tesla has been making, number one. And number two, it's not clear that Tesla can actually get above break even on the cheapest vehicles. So we'll see how all this plays out. It's an excellent point. At any rate, look forward to, please take time out to write your comments. You perhaps bring them to the end of the show in our comment section, because this gives an opportunity for folks who did not see the live show to get a chance to view. At any rate, this is Greg for Tesla Fan Insight. Tschüss, German au revoir, French Lahitrot, Hebrew Khoda Hafez, Farsi Namaste, obviously from India. And I like to add new languages as you guys have suggestions. With my final comment be, great question. There was a question there going, what happens for replacement batteries? I was very impressed recently because I just learned that if you have a pack with a problem in it, Tesla will actually temporarily replace your pack and then ship those battery packs back to the factory so the cells that are damaged can be replaced. And by the way, this is an advantage of the cell-based process, because in the case of packs, it's a larger portion of battery that needs to be replaced if there's a problem, versus in Tesla's case, you can simply replace individual cells after testing, and therefore a lot lower cost, a lot more efficient. So I thought that was kind of an interesting, another sort of competitive advantage that Tesla has in the process of how they're doing things. I'm going to give you guys a little bit of a view here of National Harbor to close out. All right, this is one of the nicest days of the year, and you're getting a chance to and that's the Wilson Jefferson Memorial Bridge right behind me. Have a great day. Thanks for joining us. Look forward to our next conversation.